All right, you ever feel like your money is scattered? Like it exists, but not in a way that actually moves your life forward? That's what we're going to talk about today. We're going to be talking about the growing wealth segment of our framework. Hey, welcome to the Doing Business with ADHD podcast. Have you ever noticed how getting work feels personal, doing work feels overwhelming, getting paid feels awkward, and building wealth feels impossible? It's not because you're bad at business. It's because your business wasn't built for ADHD. Let's change the rules. Welcome to the Doing Business with ADHD podcast. All right, so here's the disclaimer. We are not doctors. We are not therapists. We are just two guys that have built businesses. We're building businesses. We work with a lot of clients that have ADHD. We've just seen us do it. We've seen others do it. And this is our advice. We just wish that other people had been open when we were building our businesses. And we just wanted to make this a place where that information is available. So yeah, today. So you've been with us. We've talked about get work, do work, get paid. And today we're going into grow wealth, which is really Caleb's huge expertise. And I'm going to toss it over to you, Caleb. So if you want to dive on in.
Yeah, totally. This is the one that I nerd out the most on. Frankly, anybody listening, this is the only one you should even half pay attention to me on. The rest of it, I'll just pay attention to Jake on, like I do. I'm just here to learn, man. So for the grow wealth, though, that's where I'm supposedly the expert. I'm a certified financial planner, and so what that means, I'm a fiduciary wealth advisor at all times. Everything from investments, tax planning, estate planning. My specialty and expertise, I'm pretty sure that I launched and run what is still the first and only wealth management firm dedicated to business owners with ADHD. So pretty stoked about that. It's an incredibly underserved niche, and it's just been so fun to learn and grow there. You're going to hear stuff that probably sounds like tax advice or stuff that sounds like legal advice. Important disclaimer, I'm not currently an accountant technically, and I'm also not an attorney. So besides that, I'm not even your advisor, while I am a licensed, heavily regulated advisor with the SEC. Jake, I don't know if I told you, they have all my fingerprints, not just one or two. I'm pretty sure they have all 10, and my palm prints at the SEC.
That's awesome.
Yeah, it's pretty intense. But so in any event, I want to talk about this third chunk here about growing wealth, right? What does that look like as a business owner? And really, it's interesting for us because I feel like we just often are thinking, how do I get this thing up and off the ground? How do I get it going? And then once it's going, all right, how do I keep it running? How do I just grow it? And you don't really think about that last stage once the money's coming in, right? So this isn't my first LLC. I think if I've counted them up before, I had 5 or 6 prior to this. Admittedly, a couple of those were just masterclass lessons in real estate that had a fee attached to them, so to speak, and didn't really have any kind of payoff. But in e-commerce, although that one was actually really good. But so I get it, right? You're doing the business owner thing. You're taking a chance, just like I'm doing right now, and eventually these things do pay off. And the question is, what comes after that point, when it is paying off? And this is I'm always so fascinated by the folks that I see to come in. Their business is netting them a couple $100,000 a year, and then you look at their assets, and it's okay, I've got 50 grand in this old 401k that I totally forgot about. I have no idea what it's in. It's from some employer I worked at 15 years ago. And then I've got 10 grand of cash in the bank account, and I have 30 grand of bills that the clients I helped recently are supposed to pay, accounts receivable, and you just hope that they get it in. So it's it's I keep seeing these reels constantly of when you have all this money that you owe for these projects and all these bills coming in, you're I don't know how this is going to go. This is going to go one way or the other. I don't know how it's I see so many people stuck in that limbo world. And the reality is, number one, a business is an asset if it's done properly. And granted, not every sole proprietorship business is really saleable. I know plenty of skilled people who trade their time for money at a great rate as an independent contractor, but really It's just themselves, like they are the business. And a lot of businesses can kind of be capped that way, but I would argue that most of them don't have to be stuck there. Most of them can very much be built into a brand. Yeah, that's more Jake's department, and flipped and sold to a private equity firm, a guy up and running in your company, your local competitor, somebody, right? A kid someday, theoretically. There is a real value to business ownership, on the long end. Even in the short end, just the tax savings of it, everything else, financially speaking, it's an incredible move. So I want to share with you a little bit today just about the method that I use to help take business owners from launching their business to a legacy plan. And it sounds like this huge scope there. How does that hit you when you hear that, Jake?
Well, real quick,
Yeah.
can I throw in a joke real fast? I just
Oh,
made up this joke in ADHD. I'm proud of myself. Okay.
yes.
How does an entrepreneur spell hobby?
Uh, is this
Or sorry,
something about
how does an entrepreneur with ADHD spell hobby?
uh, SPEND?
LLC. Yeah.
Ah.
I think you mentioned having like 4 or 5, and I was like, yeah, I
Yeah.
think we've all lived there. So anyway, you were
Yeah.
talking about the kind of getting into the framework and stuff, and I think you and I have had this conversation where I feel for a lot of my career, even as an entrepreneur and running businesses, it was like I felt like a squirrel that kept hiding all these nuts everywhere, and I couldn't find them. And I didn't have a plan. It was just I was just sticking stuff here, sticking stuff here, sticking stuff here, and I always wished there had to be a better way, but nobody understood me, and I was so busy remembering all my stuff, you know. Um, and you've gone over, your pyramid. You've gone over this stuff with me, and I can't wait to dive into it, because just it's going to help me even talk to my wife about it more. Kind of have the language so that we can share more, so I can go back to planning our finances and stuff. So I'm really looking forward to it. We've covered several weeks on stuff, but I'm like, this is the one that I'm like, help me. This is the whole point of a business is that I tell people all the time, it prints money, and now you put that money to work. Like when you have money, put it to work, and we all want to do it in a wise way, and
Right.
that's what you're going to show us is like there are, like you said, there's lots of ways, but you're going to kind of simplify it and help us figure out what is the path that we can choose for ourselves. So
Exactly. And on the squirrel thing there, that's actually going to be what my next book is about. I had this idea maybe like 9 months ago. It was right as I was starting the business and thought, oh, you know what? I should probably wait to write this a little bit. But I just got hit by this spurt of hyper focus when I was in the shower. I like jumped out, had to go write down the outline then and there for like 10 minutes. Boom, I have the outline of my next book. This is amazing. Thank you, hyper focus. And it's all about like how squirrels lose their nuts and ADHD business owners lose their money. I'm trying to think of some clever but not crass title for that.
yeah,
Feedback's well received. Please share. I need ideas. But in any event, it's all about like us starting all these businesses, and that's how forests grow. Is squirrels literally forget where they buried seeds, nuts, acorns, and that's how they grow. My kids know that, and they think it's hilarious when they find something. Oh, a squirrel forgot about this little tree here, Dad. So this phase about building wealth, like let's just get philosophical for a moment here. I think Robert Kiyosaki was the first one in Rich Dad Poor Dad to really make sense of this to me. And that's a lot of entrepreneur starting points. He's an interesting fellow himself, but he's got a lot of cool things to say. Wealth is not necessarily being rich. Like if you make a couple million a year, by all standards in America, you're pretty rich. You can buy whatever you want, fly whatever you want. But for being wealthy, you can accomplish that at a much lower net worth. I've talked to people with a couple $100,000 that are totally wealthy. They're fine. One guy was moving back to Kenya. All he had was like 50 grand and a pension that paid him 20 grand a year. And he's like, I'm gonna go live like a king. I'm gonna have a servant in my house. And like that's different. So my point is that wealth is really just how do I live without working? There's nothing more to it than that. And retirement for most people just looks like how do I shove enough money aside while I still have the brain and the body to work, that my pantry is stocked, so to speak, and I'm not going to run out of food or money in my life. And then if there's some random old cans of beans left over at the end, great, the kids can have those, but that's enough for me. And really, it's only once you get to that life-changing money of like 30 million and up, that's when you hit the ultra high net worth category. That's how my industry would rank it. So like up to Up to 1 million, you have like your kind of middle class, 1 to 5 millions, mass affluent, 5 million to 25-ish is high net worth, and then anything above that's ultra high net worth. So people in there, that's like real legacy money, right? Where it's not about like, oh, am I going to run out of food? They're not going to run out of money someday. So like, is what's the point of this money? What's the legacy of that? And so like, there's some content I'll get into for that, but the bulk of it is just going to be more about, for the vast majority of people, it's really just how do I meet my needs when I'm not physically able to do so. So, taking that lens here, that's really all that we're going to be asking of our businesses through this framework today. Obviously, it can go all the way up through that next level framework of, all right, now the business is worth 50 million. Well, I got some legacy thinking I need to do. But this guides you all the way from scratch, like I just started this thing, what do I do? Up to that legacy planning, which again, for most people, don't feel bad that that's not entered your mind. Most people don't think about legacy until they're in their 70s, frankly. So I am going to share my screen here. Let me see if I can get the technology to work. Boom. So for those of you who are listening to this rather than watching, I just went to my website here. I'll include a link in the show notes. It's in my process tab on my website. And it just explains the planning system that I created. And so what's on the screen now is a little pyramid here. And no, this is not an Amway pyramid scheme pitch. Don't worry about that. Or Nutravitamin, but I can't even remember the name. They'll probably sue us for slander if I say their name. I forget what it is. So this is just, I call it the founder's hierarchy of financial needs. And I do have that trademarked. So funny, I should be the one joking about suing people for slander. So the founder's hierarchy of financial needs is a little bit like Maslow's hierarchy of financial of needs. And that's the idea that you first have to have food and shelter and water and security before you can start thinking about things like psychological security or self-actualization, whatever that means. And so that's a very common psychological philosophical framework that's common out there, but apply it to your finances. I think there's just as much merit here. So I always like to joke, it's kind of like Dave Ramsey's baby steps, if you've ever heard of that. Anybody's been through Financial Peace University, have you heard that, Jake?
Absolutely, yeah. We started our marriage and stuff with his tools, and got out of debt and did everything like that. That's how we started. So
Yeah, dude, same. That, and I probably have some tweaks on it now, some major tweaks on the other side. But it is interesting. Like you start that, and then you're like, oh, great, I'm through all these, and my emergency fund at 2 grand feels a little bit low. While I still have student loans, I don't have this big emergency fund built up yet, so car repairs are putting me under. But that's okay. I'm paying down my debt. But more importantly, like once you're past some of those basic metrics, then it's okay. Now what? He talks about like go invest in a mutual fund that's going to do 10% per year over and over. But like that's great, Dave. Love it. But like what is more detail, right? And so that's kind of where this gets you. But it's taking the most cutting edge research that the financial services industry has to offer. I've cobbled together the best of what's available out there in creating this. And again, the notes for this are going to be in the show notes. I'll include a PDF download of it, as well as just a link to my website. You can find it on my page. But so as we look at the bottom layers of any pyramid, we're going to look at the most foundational pieces, right? The things that you need to get this in place before you can start thinking about any of the highest ones here. Before we started recording, I was cracking jokes with Jake saying it's pretty much split up into three distinct sections here, like the bottom three, the middle three, and then the top two-ish. And really, the bottom three is like, man, I got a hole in my roof right now. I know I want to make my bathroom a little prettier, my kitchen a little more functional because it's kind of dysfunctional now, but I got to fix that hole in my roof first, right? And then all the way out of the end, that's when you're like, now I can breathe. Now I can think about what color I want to paint the guest bedroom out here, or how I'm going to redo the exterior or the flower beds or something like that. Oh, man, it sounds like there's just a brawl going on outside here. If anyone
I
hears
love it.
all yeah, this
Life
is
is
real stuff.
chaos.
Yeah, all pure chaos of the kids, and they get it from us. And so the entity choice and asset protection discussion, that's at the bottom of this pyramid. So we're going to start off boring, and we're going to work our way up the top towards more fun gradually. So at the bottom three on this pyramid are about selecting the right entity choice and protecting your assets. It's about getting the correct types of business and personal insurance. And then we get into cash reserves or emergency fund, if you want to call it that, and liquidity needs. And really, these bottom three are just kind of about, hey, here's how you don't get sued. Okay. And here's how you don't get sued and go broke. And then the next one is, how do you not go broke? And that's really all it is. And like, guys, I want to encourage anybody who's listening to this or who's watching it right now, don't get all overwhelmed when you see this. Like, it's kind of a wall of stuff you're looking at. Some of these words are big or funky looking. Just really take a step back. The whole goal of this is to check a box for you and never have to think about it again. So, like, literally, the entity choice and asset protection at the bottom is super duper easy. For vast majority of entrepreneurs, LLC is the way to go. That gives you all the tax flexibility. There's no need to incorporate as a different type because you can choose tax treatment to be taxed as a pass-through sole proprietorship or as an S corp or as a C corp. Good for some real estate investors or people trying to buy a huge house. Actually, as a side note there, a lot of people are like, why would I ever want to be taxed as a C corp? Like, well, lenders love W-2 income, so it's probably just best to do that. But in any event, that asset protection, that's where you get more into trusts. Particularly at this stage in the game, we're talking revocable trusts. So sometimes holding a business entity inside of one of those, that can be useful. But then it's not really a liability gap as much as it is more of a smokescreen. So I'm going to really resist going too deep into the weeds on any one of these subjects. But my point here is just getting the correct one in place to start, because you want to create a shield between yourself and the business. You want to make it so that I'll dive back into my e-commerce days. I think that's a funny example. I used to ship electronics to people all across the country, some international as well. And I had an LLC for it, and I had a general liability insurance policy for it. It might sound a little bit goofy, but if I ship a lithium battery to somebody that like burns down their house because it blows up in their mailbox or something, like it's real. It could happen. It has happened. I want there to be an LLC there that they can't come sue me and take everything I own. They can take everything the LLC owns. That's just fine. Like I lose a few little widgets and maybe the computer that's in the business, the e-commerce company, but you don't
It's
lose all of it.
Yeah, when my lawyer helped me, I'm going to back up. One of the
Yeah.
things that I think we're talking about this like grow wealth, and like you said, Caleb, some of these are decisions that you make, and then you check that box and you let it go. And I have found that having somebody, financial planner, lawyer, somebody to help me, just okay, yeah, these are the boxes. This is the best option. We're going to move forward. That has been huge for me. Every time I set up a business, this is how I do it. And my lawyer explained it to me. The idea of like having all of that distance between you and the business personally is you don't want to get to the end of the day where something goes wrong and then your house, your car, your kids' college funds, like all of that needs to be insulated, right? Worse, that horrible things could happen there. And when we set all of our stuff up, the lawyer told me, he said, if anything goes sideways, you hand somebody the laptop and your debit card. Like he's like, here's the phone, here's the laptop, here's the debit card. That's what you own now. It's like that's how insulated you want your business because, something goes crazy, somebody sues you, whatever, you don't want to be liable. You can't, you don't want to like have your future or your kid's future or something like on the chopping block. It can't be in peril there. So anyway, I just want to I completely agree with you. It is, I've done this wrong with a previous business and I've done this right with a previous business and with our current business, and just the quality of sleep that you get when you know that somebody can't take your house, like
Right.
it's just so much better.
Which side note on that, and this is much further up the pyramid here, by starting a business with a home equity line of credit, it's just always sketchy. Like you have to really be sure that that business is going to succeed, or else even if you have the liability pieces in play, you've just pledged your house as collateral to say, "Yep, I'm going to be able to pay this back." So
That, and if you mess up and somebody sues you and you have to liquidate your house to pay the debt, you say that, I'm like, nope. Like you've got to
yeah,
have a big insulation in between the. Anyway, I don't want to sidetrack that. I
oh
just
yeah,
completely agree. Like, and I love the idea that it's like most of these, like you said, are decisions that you can make once and check a box, or
Yes.
decisions that you can stick with for a quarter, for a year. You don't have to change and review, and or it just like it's big stuff, but it can really just be a one-time
Yeah.
act, even where it's like check the box, or in my case, you just talk to somebody and they fill out the paperwork for you. That is how I have done it. And I'm like, this is so much easier. Like the lawyer or my planner, it's like they set it up and you go, so we're good. Yep, great. See you in 3 months. Like,
Well, it's so funny, man. You just said it perfectly. Like at the bottom end of this pyramid, just building out the foundation, like it's all about checking the box and like literally these don't have to be adjusted for years or like at most once every year with help of somebody else, and they really do not occupy any space in your mind outside of that. As you get to the top of the pyramid and thinking about legacy, I mean anybody who's gotten that bug, it's in your head every day all day. Like opposite for the entity choice. Nobody ever thinks, oh, should I have really done that LLC 32 years ago? Oh, maybe I should have just started C Corp. That would have been like, literally doesn't matter. So, getting the box checked here, there's more advanced asset protection strategies. Whenever you hear about offshore accounts in places, it's not really about not always really about committing tax fraud. It's usually about hiding assets from bogus lawsuits. And for people with rental properties, like there's a ton of different ways around it. Business owners, a lot of us are very outward with our business and like we're known entities. We want our name to be attached to our business. But I will say, if you're not, if you're like, hey, I am a house flipper, I don't want people to really know who I am. I just want to like go in and buy these deals, and I want to use a different LLC for each one of those. Like those are more private types, or like security contractor, like whatever it is. If privacy is the goal, then you can just set up instead of the LLC listing you as the managing member, you can just list a revocable trust that you own there, or sometimes called a living trust. And it's generally a grand or two to create one of these. You can stick your house in it as well. So it's just like this holding tank, like a bank account that can hold non-banky stuff. And you can put an LLC inside of there, and it creates that additional layer of privacy that nobody can just go online and look you up on the public database. Um, then to move on from there, I want to look at business and personal insurance. And I can't see the timer real quick. I might lose the screen share. Okay, I didn't. Yeah, that's what I thought. I get a little long-winded on this stuff. So, business and personal insurance. This one's fairly straightforward early on. Like if you're just in the startup phase, you need some kind of liability insurance, either general, if you're shipping lithium batteries to people, because general covers people coming in your office and falling, you accidentally firebombing somebody who ordered a phone charger, um, or professional, like Jake. I'm assuming you probably have professional liability on
right,
yourself.
yeah.
Yeah, I've got that on myself. That ranges depending on the industry you're in substantially. So like my sister-in-law has a liability insurance thing. She's a counselor, right? So I was kind of amused by that. Like, oh, I guess that makes sense. That's the one that you would use in that industry. And we have the same amount there. I think we both were required to have 1 million. I've since gone and added more to mine. And she pays like 10% of what I pay on there because like she's talking to people, like helping them process their emotions. On the other side, I'm managing people's money, and so it's 10 times more expensive, that kind of liability insurance. That's just really important because if your business gets blown up in some way, you want all that protection, right? So for $100 a month, I think it's barely even that for me. Like I just know that if somebody tries to sue me for $1 million, my insurance company is going to cover that. I'm going to stay in business. I'll stay solvent. So will my family. And then the only other one I really like to talk about in today's world is cyber liability insurance. I have a good friend who's a board member and professor at a local college, and it's just crazy. So he's an attorney who specializes in this world, and he's just always sharing stories about like, oh, this company somehow or another got themselves found liable for a data breach because they just didn't contract with a good enough vendor, or they didn't have like a robust enough protocol for some like third party they were like barely affiliated with, and like whoever has the deepest pockets is the one who gets taken to task on this one, not necessarily even the most liable one. It's like, hey, bank, you used a budgety uh, budgety cyber security firm. So sure, we're suing them, but we're also definitely naming you in the suit as well because you leaked our data. So this stuff happens all the time. I've seen it numerous times in my own industry. They're terrifying. Make sure that your business policy has a cyber attachment to it. Generally, what's called a business owner's policy is a hybrid of a couple different types combined, and that will include some of that. But I just want to point that out individually. Um, and for personal insurance, basically, this is where you get into life and disability. All right, we got the business protected here. Personally, now, what do we do? Okay. I take a pretty basic stance. I really don't like whole life policies, IULs, if anyone hears of those, or index universal life. They're all just borderline scammy, very high sales commission products. Just stick with term life. Dave Ramsey's rule is your classic 10 times your income. Totally fine starting place. Most of us eventually do need to move upstream from there a little bit. And then as you get older, you hit a point where you're kind of self-insured and you say, I die, my assets are there, I'm already most of the way to retirement. My family's going to be fine, right? But everybody's got a different profile. So like as I look at some clients I could think of, we got like two spouses both working outside the house, great salaries. They only live off of one person's salary. Um, they have a couple of kids that are in school. And if one of them dies, not much really changes. Like they're still living on that. They have a pretty healthy asset pool built up, and their kids are in school. Like their expenses basically stay flat or go down a little bit. And so their amount of insurance need would be very different from somebody like me. Just because I'm an extreme example, I use my situation often. My wife and I have five kids, and we homeschool them. I have zero desire to upset that apple cart if I have an untimely demise, right? Like I want her to be able to keep homeschooling them and send them to college someday if that's what they want to do, and not have to go back to work or like go ship them all off to school. So in order to accomplish that goal that I've clearly defined financially, I've had to reverse engineer and tailor an insurance strategy to that that involves a lot of term life insurance for me, more than 10 times what I make. And that's okay. And that's really what it should be. But just as a starting place, like go grab the $30 a month, 800K $1 million policy out there. That's probably 10x your income. Just get that started. It's super easy. It's not going to be painful. And grab a 20 or 30-year term on it and you're safe. Disability insurance is similar in its price, and it's basically just about, well, what if I get like so sick or injured but not die, but I can't really derive income anymore? Well, okay, you give up generally about 1% of your income to the insurance company. That's how they price their premiums. So if you make 100 grand, it's like a grand a year. That's generally what I see. And that says we'll give you about 70 or 80K in the hypothetical, about 70-ish percent. Tax free though, so really it kind of nets out even if you think about all the taxes you have to pay on your money you make, until you're age 65. That's for like a white collar, low risk drive. If you're a lot riskier of a profession, like I've seen bakers get disqualified because they get burned on the ovens a lot and disabled. I guess it's not funny, but it was like, what? Come on. Truckers are
I
not
wouldn't think of a baker as a high risk profession. Yeah.
Yeah, no, I never had. I like argued with the insurance company. Like it's literally just like pastries for breakfast, like Danishes here. What are we? So, yeah, that one's very important just to keep yourself afloat. You want to make sure that your family is covered and that the business is covered. So you can even own life insurance in the business. And really, for partners, when you start to get firms that have a couple of partners in them, that's when you can have the firm itself own little term life policies on each of the partners, so that if they die, suddenly the other two partners have liquidity to buy out the widow or the widower of that partner who passed away. And that is smooth, it's not creating this huge cash flow crunch that becomes an existential crisis for the business. And
That's
again, I'm doing a,
that's
yeah.
I think for a lot of people I know that are multi-owner, like partnerships and stuff like that, a lot of times they could find themselves in this situation, and just having that sitting there where it's because say there's a widow all of a sudden, like that's more stress that they have to figure out, and it's on their shoulders to figure out how to sell out of the business and liquidate all that kind of stuff. And just as business owners, if you can set that up for your spouse, for the person who would inherit from you, or the other business partner, like this is just one of those things you mentioned earlier. These bottom three are really a good point of it is how do you keep your money? How do you not lose your money? And how do you stay out of jail? And this is like
Mhm.
a service that, as business partners and owners, like for yourself, like think about the other people in your life. This sets up everybody in your life. It sets up like you show up better for them, and all of your employees are going to be better. And I like to think of it as even like future you, like 6 months, 10 years down the road, whatever. You're going to be better off because some of these boxes were checked, these decisions were made, and you put system in place. You start paying on these insurance things in case something went wrong. And I really like the one you talked about, that life insurance, like the term life from the business, like the LLC owning it, um, because that really does, um, the business then in an emergency, the business can take care of the people, can take care of the owners and their families. Um, which, if you're building a business, it should at least take care of your family, right? Like that's the whole
Yeah.
point. So
Yeah, 100%. The business is supposed to be an asset, not a liability. Not this thing that like sucks the life out of you, but this thing that helps make your life easier at the end of the day. I was just talking to a client earlier today, and he's a young guy, has a good blue collar business that he's growing, it's doing well, but they don't really have much now. So our interactions, like he doesn't get my full suite of services yet, but he's like, dude, I can't wait to do that someday. Like we just bought this huge house we're remodeling, etc. Like I love that. I'm here for you when that comes. Honestly, though, the next dollar that you throw towards me should literally, like, we've got his life insurance together. We have his assets set up. We're working on a cash reserve. Like, your next dollar that comes to me someday should just be for me to create your will, powers of attorney documents, and your guardianship appointment for your kids. Because I can do all of that within my firm's capabilities, and even a revocable trust if that's appropriate as well. Um, but we don't need to talk about everything else until that's set up right now. That is the next big thing here. So, cash reserves and liquidity, just in the interest of time, I want to make sure I jump through this one. Business owners are up there in league with corporate executives in terms of people who should have the most amount of money here. So, the authority in my industry is called the Certified Financial Planner Board of Standards. It's this group who they kind of regulate the industry, but it's really like who all of us CFPs learn planning from to start with, and they regulate the best practices that most follow. They say really 12 months is good for a lot of business owners, a lot of corporate executives. I mean, you think about it, like the exec probably has to move out of state to find a job at a decent company, and it's going to take him months to find a new role. So that makes sense. Business owner, I mean, sure, that can be the case if somehow your business goes down or you have some major down trending time in there that's not like a bigger structural, like, oh no, this whole industry just went out a bit, like, oh no, I was a film producer, and oh no, that's a different thing. But whoever the guys who like made camera film, that's what I was trying to get at.
okay,
Like, if like a
like
tectonic
Kodak.
shift, yes, like exactly. My dad actually worked for Kodak years ago, and was a casualty of layoffs from shift to digital. So yeah, it's definitely like that's the kind of thing I'm talking about as a business owner. Those things can happen. 12 months preserves your life through then, financially speaking. But really, it pays to have a healthy balance there. And when I say cash, I'm not just talking in the bank, certainly under the mattress. Those two are kind of similar. There's like money market funds that you can get. There's ultra short duration bond funds you can use that yield like 4-ish% depending on market. So it's at least doing something. That's the goal for this money. And really, like, if you have 6 months in something like that and the other 6 months in something a little bit more aggressive in the marketplace that's going to do maybe like a 5 or 6%, but not exposed to the full roller coaster ride of the stock market, that's a pretty sweet spot. That's how I tend to run money for clients. I think it makes sense. The next one going up from the pyramid. So we talked entity choice, business and personal insurance, and cash reserves and liquidity. I only just skimmed over that one, but that's its own topic we can get into another time. Tax planning. I'll hit this one briefly as well, and then we're going to have to wrap it up before we go into the next episode. I'll leave you on a cliffhanger in the middle. How about that? So, tax planning. There are some times you want to show more income in a business, and there are other times you don't want to show income in a business. Usually, the best bet is to at least plan it out in the future with your goals, align it with your strategy. And I find like so many accountants, man, like and I'm not trying to throw shade on any CPAs or EAs out there in the least. I'm just saying my experience has been that so many just do retroactive tax prep and they're really good at saying, oh, this has already happened. Great, let me report it properly. Like, really good at that. But they can't really look out decades from now and say, what's the benefit of doing this versus that? Have you seen that from your view?
Yeah, we are very much a plan ahead. We have that long range, and a lot of times I talk to clients and they don't. A lot of them with ADHD, we're just flying by the seat of our pants, and that's why I said I like to have somebody that you meet with quarterly, where
Mm-hmm.
they stop you. There's a meeting on the calendar, and you look ahead and say, "Is this still where we're headed?" Because for one thing, like I've had years where the business did really, really well, and that got us into a bind personally. Just with shifts in like insurance and all that kind of stuff and tax brackets, it's kind of like we actually did really well, and because of the structure, the profit of the business landed on my shoulders, on my personal taxes, and then you look at it and you go, oh, whoops. So then you end up paying taxes and you go, the business did amazing, and I personally did worse this year than I did last year
Yeah.
because you end up paying, and it's like that is kind of where you learn the lesson, and you go, wait a minute, this isn't an even kill game. Like it's not just an increase. There are multiple levers, that move. And after learning that lesson, you go, okay, how do we plan ahead? How do we keep that financial planner, the bookkeeper? How do we keep the tax prep? How do we keep all of that together? Because like here's another thing. When say a parent or grandparent passes away and you get an inheritance, well, depending on how that comes to you, that could, if it's like say an IRA that has to be liquidated, now you get it,
Yeah.
and you're like, great, that's all taxable because it shows up as income, and you go, well, your personal income could go crazy. Well, if you have a plan for the business, okay, what levers do we pull? How do we stay on plan? These are all things that have happened in my life, and I've seen people I love and clients where it's like the I don't know if I can say this, you can't say this. I just don't at the end of the day want to be caught with my pants down and the government asking for more money. Like that's where you don't want to necessarily end up. Is like I didn't have a plan,
Yeah.
so now I have to pay in reverse. Like I have to pay for everything because I wasn't ready. Things happen; it's going to shift. But the idea of having that plan is, you can adjust. You have your footing, and like I said, if the business has a plan and you personally have a plan and you know how they are or are not connected, then you can avoid a lot of that. Or when something changes, the great thing about having a plan is when something changes, you react to the change toward your intended destination, not
Mm-hmm.
necessarily just something happened. Back to, we're all running with ADHD, and it's like we make great decisions. Like we are really good in an emergency because we
Yeah.
can make decisions fast. But if you really think about it, we're not making the best long game decision. We're making the get out of fire decision.
Mm-hmm.
And when you're thinking about your money, the legacy, when you're thinking about like, is there wealth? How am I going to use this money the 10 years down the road, me, the 3 years down, what do my kids have left? Like, when you're starting to think those decisions, it's like, I don't want to make those slapstick get out of the fire decisions. I want to make them in the calm. And I go back, I've said this a couple times, that idea of like co-working, having somebody that you can depend on, that you can trust, somebody that can remember, somebody who can remember where my money is so I don't have to in
Yeah.
between our meetings. And they can remember what I wanted. Because how many times do you want, okay, my birthday's coming up and I've got my like birthday list and stuff, and it's really funny because I go to update my birthday list and you look at it and you go, I didn't know I wanted this, and all year long there's all the random things that you want. It's like I can't even keep a birthday list updated, let alone what I want out of all of my life and all of my wealth, like building all this. So it's like somebody else that can remember that and hold you to it. And when you meet, they go, this is what we talked about. This is where we're headed. Or if I go, hey, I want to buy a boat. And they go, I thought we were headed here. A boat would slow us down from where we want to go. And I'm like, all right, yeah, the cabin in the mountains is definitely more important than a boat.
Mm-hmm.
Which one am I moving toward? A family cabin? If I want that, I'm not buying the boat, right?
Right.
So it's like, what do we want? What do we want this to be? Anyway, I'm getting all excited because I want to dream in the future, and I feel really good because I've lived without these things. Like I mentioned, Kev, I've started businesses without all of this in place. I've actually taken on contracts and then tried to get paid and realized that I had my first LLC. I had not set up an LLC or anything. And I was basically like, I'm a 1099, just me, just send me a check. Like, that, I lived that mess for a little bit and had to learn how to grow from there.
Yeah.
But this bottom third is all things that are just, it can get really complicated, like you said.
Mm-hmm.
But it also can just be have somebody you work with check the boxes, they can file the paperwork for you, whatever, and then you know that you and your family are safe. And does it
100%.
cost some money? Yes, because that's, you know, a capitalist society. It costs money. But I'm not willing to risk that I'm going to say somebody's going to take advice and then they're going to come back and go after my kids.
Exactly. Right.
Like,
And honestly, it doesn't take long to get this set up. It like
right.
all my clients, this is done by month three of working together, and then we never talk about it again. Maybe like
And
several years from then.
that idea of with ADHD, we're not likely to take care of this stuff for ourselves. If it's
Right.
just us, it's just admin stuff that we're not going to get to. And that's why I say externalize it. Make it about other people. Make it about your family, your kids, your employees. Make it
Hmm.
about protecting your customers. Because if it's for somebody else, even the like, the liability insurance, like
Hmm.
that is to make sure that you get to keep showing up and doing work that your employees can. It is protecting other people's future from the bad guys. Because in my
Yeah.
mind, it was those people are trying to take our money, they're the bad guys. And then I realized, no, the people who might potentially try to sue us are the bad guys. I need to protect my people, the people in my care, from the outsiders. And
Exactly.
when I started thinking of it that way, it became a lot easier for me to go, this is a fee I'm paying for protection of others. And
Mm.
then it's easy to take care of. As
That's
opposed to just, I'll get to it when I get to it. Like, that's how you get sued.
that's a much more helpful framing of it. Yeah, you're totally right. It is just kind of the fee for getting into it, and that's what's I think so interesting. Like with the work that we do together here on this podcast, or like the very niche work that I do here, like this chart would work for a lot of business owners in general. Like this would be the roadmap for anybody who owns a business, ADHD or not. But where it really differs and where I feel like I have to spend most of my time on is actually just helping bridge that gap in execution. I think those of us with ADHD,
Just,
the
just getting
intentions
it
are like
done.
high. Yeah. And like, how do we actually make that happen, right? How do we like literally get the LLC set up? And hey, can you hop on an insurance thing with me and literally for 30 minutes watch me click through insurance policies online and tell me which one I should do? And then like, okay, how does this emergency fund look? Okay, ask me again in 12 months. You got it. Like that's all we really need. But it's taking that extra step and co-working, body doubling, whatever you call it, with the people, sending out countless reminders with zero shame attached. Like that's how you get this stuff done is the execution there. Um,
Absolutely. Yeah.
so we should probably
I
cut it off for today unless you,
Yeah, we
sorry.
need to. I've
Yeah.
got all these questions. I'm like, yeah, let's keep going on this because I'm diving in. I'm learning. But
Yeah,
yeah,
man.
we need to wrap this one up.
So, did you want to say one more thing before we did?
No, I'm good.
Cool. So we'll just jump right back into tax planning again when we resume, and yeah, finish that off, and then head up towards the really fun stuff here. Once all these boxes are checked, we're kind of in that middle ground, like tax planning, strategic debt utilization, and diversification. Those are living, breathing conversations, but nowhere near to the scale that the top two are. Just as a reminder, again, like we're just talking like this is to both feed yourself in your lifetime and towards the end of your life when you can't work anymore, can't produce income with your mind or your body. Like that's really what retirement is. It's stocking the pantry, but and retirement is like a dirty word for business owners. I hate using it, but it's just a socially normative word. I'll begrudgingly use this time. But then on the other side is once you're past that 30 million in net worth, that's when like, okay, what do I want to happen to this fortune when I'm gone? Right. So it's two distinct things. And there, hopefully, no matter which end of that you're on, hopefully you're hearing something valuable in that in this time. And I guess we'll catch you next week.
Hey, welcome to the Doing Business with ADHD podcast. Have you ever noticed how getting work feels personal, doing work feels overwhelming, getting paid feels awkward, and building wealth feels impossible? It's not because you're bad at business. It's because your business wasn't built for ADHD. Let's change the rules.